first, I got to address this, okay? Listen, if we go back to this time last year, the public count was under $2 million. Under $2 million. And to see it now, going into 2025, well over $3 million, it exceeded my expectations. I have to be honest with you guys. So maybe I kind of go, maybe I'm a little too bearish sometimes when I go into thinking about a new year, when I go into thinking about stock performance and things like that, because, you know, you're going to get slapped in the market sometimes. And if you've been in the market 16 years like I've been, you know, sometimes you can go into things optimistic, but not too overly optimistic. So sometimes I like to leave room for like upside, right? Even when I do my bull and bear cases and those sorts of things, sometimes I like to be conservative with my base case, right? So tremendous year. Obviously, we destroyed the market this year, and that's unbelievable. But we've also done that in the past 5 years in the public count. We've averaged over 25% return per year over the past 5 years in the public count, according to Fidelity Investments. That's versus 14% for the S&P 500, which that's a pretty good return for the S&P 500 per year, right? Bonds, the Bloomberg U.S. Aggregate Bond Index has actually given you a negative return per year over the last 5 years, which is shocking. And then the 3-month Treasury is giving you about 2.5% per year, right? So it's been a heck of a past year, but it's also been a heck of a past 5 years for the public count. Absolutely shocking. And, you know, so we'll see. Like, my expectations, maybe they're going to be a little low when it comes to this, right? Now, additionally, the reason this account's really gotten here is on the back of a few key stocks that have really done so well for the portfolio, right? Tesla, you know, cost basis on Tesla's $13,000. The gain on Tesla's $396,000. Think about that for a moment, right? It's $7,279 into ELF, $118,000 gain there today, right? $25,000 into Palantir for a $241,000 gain on those current shares, right? Meta, $201,000 into it, $826 in profits right now, right? We'll speak about Meta and my expectations for Tesla, Palantir in this video here today. Amazon, $123,000 into it, $125,000 plus in profits now for Amazon, right? So it's been a few key stocks that have really gotten us to these sorts of numbers, and that's all it takes, you know, in the market. You pick a few good ones, and they're going to take your portfolio a whole long way, and obviously that's what's you know transpired here, right? Now, when it comes to the markets in general, okay, this is what I'm showing you right now is the past 30 years of S&P 500 P ratio, okay? And what we're going to find is we're in elevated ranges for the P ratio right now. With that being said, it's not like we're at unprecedented ranges, right? Certainly back here, P ratios got really high. That was during Rona, right? Because everybody expected earnings to come back, so a lot of people were willing to buy up the market on the hopes of earnings coming back, and that's actually what we have seen, right? Earnings came back very strong after Rona, right? Right here, we obviously got to insane P ratios, but this was during the great financial crisis, so company earnings tanked during that particular time. But people were willing to still pay up for the market because they believed earnings were going to come back after the great financial crisis. And sure enough, they were right. Like, earnings did come back dramatically after that, right? Right here, this was kind of during the tech bubble popping. Obviously, we know what happened from that standpoint, right? And this was prior to the tech bubble popping, right? So here, you actually saw P ratios get very, some would say outlandish, kind of in 1997, 1998, but yet we still went up from there, right? So the moral of the story is, when it comes to PE ratio, is there something you can look at here and say, we're going to have a great year in 2025, or we're going to have a crash in 2025? The answer is no. There's nothing by looking at this that can give you definitive feeling of like, we're crashing next year, or well, technically this year now, right? We're crashing in 25, or we're going to have a great year in 2025, right? So, you know, I feel like the market is appropriately priced, or maybe a little richly priced, but you have to break it down stock by stock, right? Because you got to think about what are the stocks that matter to the most to the overall market. They're the big tech stocks. They're Meta, they're Google, they're Nvidia, they're Amazon, they're Apple, they're Microsoft. Those are stocks that have the biggest weights in the S&P 500, the biggest weights in the Qs, right? Those are the ones that, if you're a retiree, this is where your money's at, right? And so you got to kind of go through those on a case-by-case basis and say, is this stock cheap, fair, or expensive, right? So if you look at Meta's a cheap stock right now. You're looking at a forward P of around 24. Keep in mind, Meta comes in and usually smashes their expected numbers, and these are based upon analyst expectations. So Don't be surprised if Meta comes in and smashes numbers, and maybe the reality forward P for Meta is 22 or 20 right now, right? That's pretty darn cheap when you consider Meta's growth rates in earnings per share and in revenue, okay? So Meta's actually a cheap stock right now, not an expensive stock, not even a fairly priced stock. Google, also a cheap stock right now. Forward P on this one, 21. Don't be surprised if Google comes in and beats their numbers throughout the year. So Google, when you look at the growth rates expected here for Google, it's actually a cheap stock. Nvidia is not an expensive stock. A lot of people think like, oh, because Nvidia stock price has gone up so much, it's, overvalued, it's expensive. Sure, if everybody stops buying AI chips tomorrow, yeah, Nvidia is going to be in trouble. But does that look probable? Are Google, Meta, Microsoft, Amazon, all these big dog companies, right? Oracle and all of them, are they all going to stop buying AI chips tomorrow? That doesn't look very probable. So as long as the revenue keeps flowing, Nvidia is not an expensive stock. It trades at a 36 forward P, which sure, it's about, we can call it 70% higher than an average stock in the market, or 80% higher. But the growth rates of this company are 2x, 3x, 4x, 5x, if not more than that, an average stock in the stock market, right? So Nvidia is not an expensive stock, just to be quite frank. Now, if you go to Apple, Microsoft, Amazon, other ones, right? I would say Apple's fair value for Apple. Maybe you can make an argument that Apple's slightly expensive. Okay, forward P on Apple's 32. The growth rates next year will probably be single digits, maybe high single digits. So I think Apple, they have a very durable business model. If somebody's iPhone breaks, they go buy another one, right? Somebody's iPad breaks, they don't even really consider another option, right? Once you're in the Apple ecosystem, like a lot of people don't even consider another tablet, another computer, another phone of some kind. So you got to pay a premium for that, and they obviously have the App Store, which they get their 30% cuts on everything people get for those apps. So at the end of the day, I think Apple's fair or slightly expensive. Microsoft, I think, is very fairly valued. 31 forward P on this one. Double-digit top-line, bottom-line growth. And at the end of the day, recessions, no recessions, business climate's good, bad, anything in between. People stay signed up for their Microsoft suite of products. You obviously get the cloud business there as well. They also own their major video game business between Xbox, Activision, Blizzard, all that, right? I mean, shoot, like Microsoft's just a really dang good company. It's at a fair valuation. And Amazon, you might think that one's expensive at a 37 PE, forward PE. That's actually very low based upon Amazon's historical standard. And based upon Amazon's growth rates and future growth rates, Amazon's actually kind of like an Nvidia situation where you might think it's expensive, but it's actually not expensive when you start to run numbers about where this company will be 3 years out, 5 years out, 10 years out when it comes to revenues, the earnings per share. So their margin story is still very early days. So Amazon's actually not expensive, right? That leads us to Trump. This is going to be Trump's first year getting back in office, right? He's going to be in here in the next few weeks. So, Trump. For those of you that did not invest under Trump 1.0, I can tell you there's a lot of optimism that comes with Trump being in office, right? There's a lot of optimism about real estate, about stocks, about business, about entrepreneurship, and those sorts of things, right? But you also do have to understand with Trump, a lot of drama comes with that. As with all things in life, there's not just upside, there's downside as well. And with Trump, there is a downside as well. And that is he does bring drama. He does say a lot of stuff. Some of it he actually means. Some of it's more just for negotiations or talking points and things like that. But you got to understand with Trump, there's going to be some really good times and there's going to be some really dramatic times. And it's going to be a whole show, okay? No, if I look back at Trump's 4 years in office before, 2017 was, good year, really good year. Not a lot of drama really in 2017. A little bit here and there, but there wasn't a lot of drama. 2018, completely different. A lot of drama in 2018. We had some drama earlier in the year, and that was nothing compared to what we had later in the year. Late in 2018, oh my gosh, it was a whole dramatic market. You had the Federal Reserve starting to want to raise rates. You had Trump, who was basically saying, don't raise rates, right? Meanwhile, you had worries about tech stocks getting overvalued. Meanwhile, you had worries about tariffs. It was a lot. And it all came to a head, essentially, at the end of 2018. And there was, late in December, we were on pace for the worst December in the stock market since the Great Depression, actually in 2018, right? The market came back a little bit at the end of 2018, and then actually 2019 ended up being a great year for the stock market. But 2018 was a drama show, I can tell you that. It was a drama show. 2020, also a drama show. Now, keep in mind, 2020 was a year that was, it's not like Trump could control everything that happened there with Rona and everything that happened there. We had worldwide shutdowns, right? So that went way beyond just the United States. So, but 2020, no doubt, that was certainly a dramatic year there, right? Now, the important thing to remember is 2017, Trump actually had a very good setup there. The market hadn't really been doing much. It had actually been holding back gains for a couple of years. 2015 was actually a down year for the market. In 2016, the return was decent, but it was about 9% return. Sometimes it's better to come in when the market hasn't been doing much for a couple of years versus coming in the market's red hot. This, in my opinion, is actually a tough setup for Trump coming in this time around because he's coming in on 2 red hot years, right? 24% return in 2023, 23% plus return in 2024. That's a tough setup. And markets already started to go risk on in 25. We'll see. If the market keeps going risk on all the way into the inauguration, I mean, geez, that's a tough setup. Really tough setup, I think, for the next 2 years for him overall. Whereas I thought the setup here was just a lot easier overall for him. So that's something to kind of keep in mind here. Now, what I'm showing you is very important here. This is the S&P 500 and how it is done the third year after the market returned 20% plus, okay? And what we're going to find is, if you look here, 1927, 31% return, 1928, 38% return, followed by Great Depression, 1929, negative 12%, okay? 1935, you had a 42% return, 1936, 28% return, and 1937, brutal crash, 39% decline, okay? 1954, 45% return, 1955, 26% return, followed by a 3% return in 1956, okay? 1995, you had a 34% return, a 20% return, followed by then a 31% return. Holy smokers, that was no dang jokers in 1997, right? And then here we have 24% return, 23% return, and then the big question mark of what's it going to be. So looking at this, there's also nothing concrete you can really gather here, right? You had one decently bad year, you had one decently good year, right? You had one great year and you had one crash year. So there's also, looking back at this sort of setup, you can't draw any conclusions there, right? If all of them had been bad years, then we say, okay, it's likely it's going to be a bad year. If all of them had been good years, right, after 2 banger years, we can say, okay, it's likely going to be a great year, but you just don't have that to go off of either here. So it is something to keep in mind here, right? Now, the big question, in my opinion, for the overall market is the stock that's mattered the most to the stock market the last 2 years is what? The last 2 years, the stock that matters the most to the stock market is this company named Nvidia, right? And there is going to be a big question mark that happens in the second half of 2025, which is how does the market treat Nvidia when it's going to have major slowing of growth rates? Because there's no debating, in my opinion, that growth rates will slow substantially in the second half of 2025. Nvidia is going to run against these ridiculous comps. They're going to have, they're going to be comping against $30 and $40 billion quarter numbers, right? And so Nvidia is going to still be growing in the second half of 2025. It's just the growth rate is going to slow substantially. And I think it's going to slow much more substantially in the first half of 2026. How does the market take that? I think that's going to be a big question because there's a big difference between posting 100 and 200% revenue growth or even 90%, 70% revenue growth and then going down to modest 20% revenue growth, 30% revenue growth, which is what we're going to be talking about when we're talking about 2026 when it comes to Nvidia. We could even be talking about 10 or 15% revenue growth in 2026 for some quarters for Nvidia. And that's going to be a big question, man. I mean, that's going to be a major, major question. How does the market take that when the most impactful stock, we're going to have to find, the market's going to have to find something that becomes more exciting than Nvidia, right? And where does that come from? Does it get excited about Google and Meta? Well, that leads us into our next thing, okay? So here's my thoughts on what makes the most sense for the stocks that matter the most to the stock market, right? And those are the Apples and the Microsofts and all those sorts of stocks, okay? I think what makes the most sense in 2025 is I think Apple, Tesla, chill. I think they kind of take a chill pill. Are the stocks going to move up and down throughout the year? Yes. They're going to be volatile. It's going to be like Apple's going to be risk on at certain times, total risk off at certain times. Tesla's going to be total risk on at certain times, total risk off at certain times. But overall, I think when you're going to look at it, at the end of the day, I think they're going to ultimately have chilled in 2025. Meanwhile, I think Microsoft, Amazon, and Nvidia set up for 20% plus upside. I think those stocks actually set up for good years in 2025. I think Meta, Google, and AMD, which AMD is not really that big of a tech stock. It's about a $200 billion market cap. I think those ones set up for a great year. I wouldn't be surprised if they return like a 40% plus return. And the reason being is if you look at where those companies are valued at, P-wise, forward P-wise, 2-year out forward P-wise, 3-year out forward P-wise, I think they set up very, very well. So those sorts of stocks, I wouldn't be surprised if they perform extraordinary, right? And so outside of a black swan event, I think the market could have a decent year. I don't think it's going to be like a booming year, like crazy upside, because I think some of these big dogs will kind of take a chill pill this year. But I wouldn't be surprised if it has a decent year overall, right? And I also wouldn't be surprised if maybe it's a more risk-on year at the front of the year and then it kind of sells off in the back of the year or something like that, right? Which is always a potential. Now, with that being said, this is my favorite video I put together in 2024. I did this video, I think it was around fall time or late summertime, right? And it's called 16 Years of Stock Market Advice in 52 Minutes. And that's my favorite video I did the entire year on either of my channels, right? The main channel or here on the reaction channel. And so in that video, I give you a lot of tips and pointers on setting up your portfolios, setting up your thought process to be ready for whatever. So let's say it's not a good year. Let's say it's a bad year for the stock market, right? You'll really learn my frame of thought on how to position yourself. So it doesn't really matter. Like for me, at the end of the day, I don't even really care how the stock market does next year. I don't. Crash the stock market. That's fine. I got a lot of cash around. I'm ready to buy stocks if that happens, right? And I own some great companies that even in a crashing market will still perform very well, and I'll make a ton of dividend money because I own many dividend stocks as well, right? Have the market go down slightly. That's fine with me as well. I get to pick up a lot of good stocks at good prices, right? Have the stock market flatline next year. That's fine with me as well. I would love to pick up a lot of these names I'm picking up right now. I would love to continue to buy them for the whole year. Have the market go up slightly. Cool. I'm going to make a lot of money if the market goes up slightly. Have the market have a beast year. Okay. If we talk about the public account goes to $4 or $5 or $6 million next year, I'm not going to complain about that. I'll take $4 million or $5 million. That's fine. Whatever way, it's all gravy, man. It's all good. And so in that video, I go through a lot of pointers and a lot of tips so you guys can get on a higher level and, learn from somebody that's been doing this for 16 years to, position yourself for whatever market comes at you. You're going to be positioned well, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. AMD, Advanced Micro Devices, is a stock that's $120 something right now. Recently, it was trading under $120 a share. It's had a pretty rough year, down about 10% over the past year. Now, in regards to AMD, it's incredible because you've seen a lot of people sell out of the stock over the last, several months, right? I believe they're making a huge mistake. And I believe a lot of these people that have been selling the stock over the past few months, right, are going to come flying back to the stock sooner or later. And the reason being is AMD is going through a very exciting opportunity right now. The trailing 12-month revenue, right? You look at that versus current year expected revenue versus the next year revenue growth. And what do you see? A continued growth acceleration phase we're getting into in regards to AMD. It's extremely exciting. And we don't know where the top is for AMD. Maybe it's 2025. Maybe it's not till 2026, 2027 in terms of this revenue growth acceleration. They could have quite a while to go there because do remember they're playing catch up in the AI space, in the data center space to Nvidia, right? And so I think there's going to be a lot of catch-up to be played over the next several years. And a lot of people believe that AMD won't even start to see the really huge numbers until 26 and 27, right? 25 is just kind of an appetizer for the main course that's coming in 26, 27. So this is very, very exciting time to be in this company.
Additionally, look at this. This is on a trailing 12-month basis looking at AMD's revenues, right, here on 1000X. And what do you see? There was clearly a flatlining for quite some time in regards to revenues, right? That's very self-explanatory there. You don't have to be a stock market genius to be able to look at that and be like, oh yeah, they were basically stagnating revenues for a while. But just very recently, this is where we're at right now on a trailing 12-month basis. Revenue has started to go up again. And this is a projected trailing 12-month revenue and what's expected to happen there, right? So the moral of the story is here, folks. People selling here in the second half of this year, I think, are making a big mistake with the stock because we're just at the infant stage. We're at like the first inning of the growth turnaround for AMD. And it's likely going to be a several year growth cycle for AMD. So to be selling the stock here, I think a lot of people are going to look back and be like, what the heck were we doing? We should have been buying every share in sight right now, right? Now, additionally, you see the gross margins of this company. They troughed, probably 6-7 quarters ago now at this point in time. Gross margins were 42%. And they continue to go up. Now they're pushing 50%. I don't see that slowing down. I see them pushing to 55 to 60% gross margins, which is still nowhere close to like the 75% gross margins Nvidia is commanding. But I do believe they still got a ways to climb from where they're at to more like that 55 to 60% range, right? So this is another factor that, like, do you really want to sell a company when their revenues starting a skyrocketing cycle, the gross margins are, the net margins are, like, come on, man, that's wild. Now, additionally, what I'm showing you right now is earnings per share on a trailing 12-month basis. This is where we are right now, okay? And this is what's projected to happen here over the next bit of time, according to analyst expectations. And I think actually analysts are a little too bearish in regards to projections. So I actually expect the numbers to be quite substantially better than this. The moral of the story is, like, AMD is a steal deal here. Now, I'll read some projections for AMD. I have them doing revenue growth in 2025 about 30%, and net income growth should be around 200% roughly in 2025, right? So you're going to see this company's net margins get to a more healthy place, let's say mid-20s. So here's about 26. Which, keep in mind, still a mile and a half away from Nvidia. Nvidia's been, net income margins have been around 50% recently, like just off the chart ridiculous, right? So they're going to get to a more healthy state here. I have them doing 25% revenue growth after that and 35% net income growth after that, right? And getting their net income margins to, let's call it low 30s come 2028. A 30 to 50 P is fair for AMD. That puts a stock in 2028 somewhere between $400 and $650 plus, right? Which gives you a compound annual growth rate on the low end of 30+%, on the high end of 50+%. So the moral of the story is here in regards to AMD, this stock is a buy. Oh, and they have one of the most impressive CEOs of the past decade in Lisa Su leading this company, and she doesn't seem done anytime soon, right? Additionally, they have now a good balance sheet, and they continue to make some very strategic acquisitions to put the company in a much better position to fight over this next decade, right? I did a video recently here on the channel called Buy AMD Stock and Don't Stop. If you want very in-depth analysis on AMD, that's a 32-minute video just dedicated toward AMD there. You see it in the thumbnail there. Buy every share you can. And that's really the way I view AMD. And that's a very significant video there. And the reason being is that's part of a series I did in 2024 called Buy This Stock and Don't Stop. And these are stocks I featured on the series in 2024. Shopify, Palantir was $20 at that time. Palantir is like, what, $80 or so now? Tesla, which is now $400 plus, it was $180 at that particular time. Nike, which is around the same price as it was at that particular time. Celsius, and then Elf, which at that time was $101, and now Elf is pushing, close to $130. So there was a very significant video there to be featured in that series. I definitely think it's worth a watch if you really want to get into AMD stock nitty gritty. Okay, now, here's the deal, okay? 741 shares I'm at in the public account right now. I don't think I have much time left to buy the stock in the low hundreds where it's at right now. So I'm moving with a lot of urgency in regards to AMD. I'm acquiring shares very rapidly. I would love to be wrong. And let's say I have 6 months to continue to buy AMD in the low 100 range. Let's call it 120, below 120. I would love that to be the situation, to continue to add to AMD for the next 6 months. But I have to be honest with you guys. I don't think that's much of a reality. I expect AMD stock price to strengthen as 2025 goes along, more and more and more as the year ticks on. So I hope it stays down, but I don't think it is, and so that's why I'm adding this stock very, very aggressively right now.